Good morning, dear students. I welcome you all to the live Zoom session of O3 Accounting. As we all know, we witnessed the commencement of a new chapter yesterday, and that is revenue and capital expenditure and receipt. Yesterday's lesson was completely based on the types of expenses that can occur in one organization, right? We had a very comprehensive idea about it. And today, it is now the receipts that are left to be studied thoroughly and comprehensively. Now, obviously, if at one end we are talking about expenses, the other end we are talking about receipts. So it's very easy for us to understand that what are receipts. Receipts are basically all the incomings of a business. Incomings or inflows of a business. Whatsoever a business is earning or receiving is basically a receipt for the business. Business can sell goods, business can adopt trading activities, business can either sell non-current assets, because once the non-current assets are bought, they are also to be sold at one time. So anything that a business sells, and for that thing a business receives something, some money, obviously some inflow, it is basically referred to as your receipt. Now, without taking much of the time, let me distinguish between the two types of receipts. One is capital receipt and the other one is revenue receipt. There are two types of receipts, just like expenses. One is capital receipt and the other one is revenue receipt. Now, what are these two types? We'll go through them and have an elaboration in detail, turn by turn for both of them. Well, to start with the capital receipt. Let me just first write down the definition so that we can then elaborate it and understand its concept well. All inflows that are received by a business by selling its non-current assets. By selling its non-current assets, or any inflow that is particularly related to the statement of financial position. The first part of the definition is quite clear enough. It says that all inflows that are received by a business by selling its non-current assets. So, पहली definition का जो हिस्सा है, the part of the first definition, it says that whenever a business is selling its non-current assets, the money that is received, the inflows, the funds that are received by selling those non-current assets would be categorized as your capital receipt. Whereas the other part of the definition says that any inflow that is particularly related to the statement of financial position, आपकी balance sheet से जो भी आपके inflows related हैं, whatsoever they are linked with, इसकी एक example हो सकती है जैसे कि received a loan. ये लोन जो हम रिसीव करते हैं, दिस इज बेसिकली अवर रिसीट, हमने रिसीव किया. Now, if we can particularly see, this loan is basically a part of the statement of financial position because it is recorded in the statement of financial position under the non-current liabilities. So that means this receipt is particularly related to statement of financial position. So this loans, the receiving of this loan would also be categorized as capital receipt. So remember one thing, any transaction that is particularly related to the statement of financial position or any selling of any inflow received by selling the non-current assets, these both categories are your capital receipts. I hope it's clear to everyone. Please go through the definition once again so that we can then move on. In case you have any kinds of queries or something, I'll be getting back to you to solve them after the end of the lesson. All right, what is revenue receipt? Inflows of a business which are earned through its trading activities. That means that is the selling of trading goods to customers, और इसकी बल्कि एक एग्जांपल भी लिख लेते हैं, sales revenue. Inflows of a business which are earned through its trading activities, that is the selling of trading goods to the customers, or any inflow that is particularly related to the income statement. Now, it has a very clear distinction, capital and revenue receipt over here. It first of all says that inflows of a business which are earned through its trading activities. That means capital receipt was particularly, the baseline concept was that non-current assets receipts were categorized as capital receipt, but here not the non-current asset, but the normal trading goods. Whenever they are sold, whenever trading goods are sold, they are categorized as revenue receipt. Whatsoever the money is received by selling of the trading goods is categorized as revenue receipt, right? Okay, इसकी simple सी example है the sales revenue. हम goods जो sales करते हैं, हम goods बेचते हैं, goods sell करते हैं, either on credit or cash, they are all categorized as revenue receipt. या फिर there is one more definition which defines it. Any inflow that is particularly related to the income statement. भाई कोई ऐसा inflow business के पास आ रहा है which has a particular link with the income statement or it is recorded in the income statement. जैसे वो example की loan की, the loan was particularly recorded in statement of financial position, that is why it is a capital receipt. But whereas any inflow that is being recorded in the income statement would be regarded as the revenue receipt. इसकी examples क्या हो सकती हैं? There can be many examples of it. For example, discount received. We obviously know where is discount received recorded. It is recorded in the income statement. So that is why it would be regarded as revenue receipt. Interest received. Interest या फिर commission received. Again, it is an item of income statement. So would be recorded in the income statement and categorized as revenue receipt. And just like these two examples, we have many other numerous examples which can distinguish and define these two things. Well, this is the basic difference between the capital and the revenue receipt. Now, class, without wasting much of the time, if you could please refer to the chat box and see that you'll be having a document over there. I'll be giving you 10 to 15 seconds. Please open up that document and keep it in front of you. We'll be solving some practice questions from that document. Well, the heading, if you all have the document in front of you, you can see the heading says practice questions O3 accounting 13th August. That is the date today. And the topic, as we all know, the first question says explain the difference between capital receipts and revenue receipts. This is a pure past paper type question. I have written these definitions extensively and comprehensively on the board. You can all attempt that back at your home. I don't think so that I need to attempt this part over here in my lesson. Well, we'll now jump to the B part, or the question number 2, which says that similarly as we did for capital expenditure and revenue expenditure, we have to indicate by placing a tick which transactions are capital receipts and which are revenue receipts, right? There are 2 columns over there. One is for capital receipts and the other one is for revenue receipts. All we have to do is we have to turn by turn identify that whether the transactions are capital or revenue receipts. Okay. Cash sales. The first transaction in the table is cash sales. Now, what is cash sales? Cash sales is the selling of goods to the customer. I told you a while ago that whenever we are selling goods to a customer, that means it is your sales, and sales is regarded as your revenue receipt. So the first transaction is your revenue receipt. Moving on to the second one. Loan from a bank. Whenever we apply for a loan from a bank, it is regarded as a non-current liability. And non-current liability is recorded in your statement of financial position. And any item that is related to the statement of financial position is your capital receipt. It is your capital receipt. Okay, third, discount receipt. Again, it is an item of income statement. It is recorded in the income statement, so it would be your revenue receipt. Commission received. Commission is also recorded in the income statement, so that implies that it is again a revenue receipt. And the last one is sale of a motor vehicle. We have sold not an ordinary good, we have sold a non-current asset. Motor vehicle is a non-current asset. Whenever you are selling non-current assets, the money received would be categorized as capital receipt. That was the basic definition of the capital receipt. Well, I hope this second question is clear to everyone. Without taking much of the time, I would like to make a small announcement over here that if you have any queries or ambiguities related to the answers of this question, I'll be taking those at the end of the lesson. Well, now I would move on towards a question that is a bit different in a sense that it has 4 columns now. Like under the shadow of this question, you have to identify that whether any transaction is a revenue expenditure, revenue receipt, capital expenditure, capital receipt. Right. Now, this question I have designed just because that as we have studied the concept of expenditures yesterday, we are done with the concept of receipts today. So why not attempt a collective question for today? Right. The first transaction in the third question, the last question, it says sale of a motor van. Again, sale of a motor van. First thing is this, that it is a receipt. Then motor van is a non-current asset. So the sales of a non-current asset would be regarded as a capital receipt. So this is capital receipt, the first transaction. Second, purchase of new motor van tires. Tires is one of the spare parts of a business. And the spare parts are not regarded as a non-current asset. So it's an ordinary thing. So this would be basically your expense, but won't be your capital expenditure. This would be your revenue expenditure. Third, cash discount received. We solved this transaction in the previous question as well. It is basically your revenue receipt. Why? Because discount received is particularly recorded in your income statement. And any receipt that is related to the income statement would be regarded as revenue receipt. Fourth, purchased a new motor van. We have bought a new motor van. That means we have bought a non-current asset. And the non-current asset buying is basically your capital expenditure, right? And the final one. The final one says, took out 10-year bank loan. हमने 10 साल का एक बैंक लोन लिया. Again, this is an item of statement of financial position, and any item that is a part of the statement of financial position or is recorded in the statement of financial position would be regarded as your capital receipt. There you go. This is the end of our practice worksheet that was planned for today. I hope things are clear to everyone. I've tried to ensure that majority of the things which are gathered and assessed under the umbrella of this topic, they must be reaching you all, and they are conveniently understandable for you all. Once we are done with it, we'll be moving on to the next lesson. Well, for today, we had a very healthy practice, a very healthy know-how about the concepts of this topic. And if you have any queries or questions related to this topic, I'll be taking them in a short while. Thank you very much.